Joining us for a further look on what's playing itself out in that market scene is Robert Towell from Sasfin Wealth. Rob, thank you so much for being with us today. It's a pleasure having you.
Thanks very much.
All right, Rob, it looks like we're seeing upbeat screens in Europe. That could be on the back of some PMI data coming out of that area. But also, the local market not faring too badly. I mean, other than, I think, financials, which are standing out in the red today.
Yes, a good day. We had Foschini's numbers that came out, which were quite firm, and we see the retailers all recovering quite nicely today. Also, yesterday we saw volumes pick up a bit for the first time in the JSE. We saw 17 billion, and today you started to see volume come back in. So maybe people are finally, back in the markets and starting to, put flows back through the South African market. Today we've seen precious metals and miners up a lot, 4%. You see the platinum starting to recover. And then general miners as well, relatively firm, 2.6% up, as you said. So relatively firm day across the board. And, we started to see, back to all-time highs on the S&P 500 and Dow, etc. So you still have momentum, lots of geopolitical risk around, but, earnings are coming out. They've been okay so far. And on our side, the retailers, a little bit soft, but no disasters. So you're starting to see some money flowing back into the system.
Let's touch on retailers. I mean, Foschini Group out today. The TFG Africa seems to have done really well, Rob, but I can't say the same for London and Australia. It is looking like a tale of two territories.
Yeah, so on Australia and the UK, they came from very high levels of previous years. People came to spend after COVID. So they did have quite a difficult task to beat those numbers. So you see some negativity there, especially in Australia. And you saw in Woolworths numbers that Australia was really weak as well. So Australia, definitely the consumer under a bit of pressure there. The UK, I'm not too concerned with. They had a very, very high base initially, and you've seen some weakness there. And the market in general, is looking fast, at least the UK numbers. Locally, they held their own. Locally, and then obviously on the Africa side, they grew very nicely. So you're starting to see that even in Africa, online shopping is starting to increase, and they're starting to get some growth from their online shopping. Nearly 10% now of their total turnover is coming from online shopping. And I think that's going to continue to grow. And their platform, which is Bash, is really good, and people are using that a lot. So we'll probably still see growth coming through Foschini on the online side. And overall, they've been the best retailer on the clothing side for some time now, and you're still seeing that continuing. So a good set of numbers, and they've pushed up the retail sector today across the board.
I must ask you about how interesting it is to also see that they've still been conservative with granting credit. It does tell me that Foschini could be, at least in Africa, the retailer of choice because cash consumers are still heading in that direction, even though, Rob, they're not the most affordable, not as affordable as a Mr. Price or a Jet, for instance.
Yes, I think their numbers, 75% were cash. So, still a very strong cash business. So they've got leeway to start to open that credit facility if they really want it. So I think later in the year, if you start to see interest rates start to come down and you start to see meaningful reductions in the interest rates, they could really still open up that credit side. They have been relatively strict with it, but it's possible that, you're at the top of the cycle, this is where you want to start opening the credit tap. So you could get an extra batch of growth in the second half of the year from Foschini from the credit side.
Also keen to look abroad now, looking at Netflix. They've gone on to increase subscribers. I'm wondering, Rob, this issue of measuring Netflix success by number of subscribers, is it the most accurate metrics? And is it the long-term metric that we'll be looking at, how many new people or how many new subscribers they have on board? Or are we going to start looking at, normal things like revenue and earnings?
Well, I think you're looking at the number of subscribers less now as you did before. They used to, the jumps in the subscriber numbers at the start of Netflix was so huge, and it obviously led to how much growth they're going to get. Obviously, now you also want to look at how much each user is spending on Netflix. I think that's where we're going to be looking. Is the base staying stable and growing? And then from that base, how much is everyone spending on Netflix? So I think that's really where we're looking at, is how much spend. And obviously, you don't want to see a big drop-off of subscribers at any point. So yes, it will always be important, but I think how much they're spending on Netflix now is going to start taking precedence how we look at Netflix's numbers.
Keen to see that one. Also interesting to see Alibaba in China. The co-founders there, Jack Ma and Joe Tsai, have gone on to acquire shares in there. That's really boosted the share price in Alibaba. I'm wondering, Rob, what markets really respond positively to founders and executives going on to buy shares in their own company here. That shows the confidence from management side, and I guess it does then increase the appeal from an investor perspective.
On a valuation level, Tencent and Alibaba have been really undervalued for a long time, as sentiment in China has been so weak. And you've been waiting for changes in the Chinese regulations for uptick in those prices. For the founders to come back in and buy, and there were quite a lot. I mean, I think it was $200 million worth of spend that came into Alibaba. Yes, that's definitely positive. It's a big number, and it's not just a fleeting amount that they're buying back in. So I think that is very positive, and it builds the case that there's a lot of value in Alibaba and Tencent. And if the regulations go in their favor or just soften from the Chinese side, you would see, I think that's very positive that the owners are buying back into those companies.
Before we move on, I want to ask on ASML, semiconductors, very important, I think, business in the way the world is going right now. They've come out, they've beat market expectations there, but of course, we are seeing them, responding to pressure from the United States to hold back on China. Is that a wise decision? The Chinese market is a big one, and one with many technological advances.
So ASML actually make the robotics that build the chips, and they've really got nearly a monopoly in that sector, because their machines are the machines that can make the smallest chips. Yes, I think it does. China is a very big market for them. They are European and not directly US companies, so they can get around some of the sanctions. But at some point there will be, either everybody's going to stop with China automatically, and there's going to be no sales through there, and then you'd only have the rest of the world markets. But I think that at the moment they're in such demand, ASML, for their products, that it's going to make a marginal difference to start, unless at some point they're not able to sell any machinery in there. They can sell second-tier machinery, which is still very advanced, and I think those flows will still go through China. So at this stage, I don't think it's too much of a problem for ASML at the moment. And a fantastic company.
Unfortunately, we have run out of time. We're always keen on catching up with you. Thank you so much for speaking to us today. That was Rob Towell from Sasfin Wealth.